Hey, good day, everybody. This week on Earnings Call, we're talking about PepsiCo, Delta Airlines, JP Morgan, Wells Fargo. Those earnings happened last week. We're going to review how they performed. And then this week, we're looking at more airlines and more banks: UAL, United Airlines, Goldman Sachs, Wells Fargo, American Express, and a couple of more, all coming up right now. Hey, welcome to the show. Welcome to Earnings Call. My name is Jeffrey Beamer. I'm the senior investment strategist over at ewotrader.com. And we are now into the very beginning of earnings season. Last week kicked us off with PepsiCo. In fact, let's jump right in and look at the headlines, beginning with Pepsi. With PepsiCo, believe it or not, Pepsi popped. Get it? Pepsi popped. Down here in the South, we say everything's Coke, and then you specify which version of soda that you want. But PepsiCo jumped on earnings, and if we look at the chart here, even though PepsiCo beat earnings and then lowered their full year guidance, we had a move of only 1.92%. The estimated move was less than 4%, and that's exactly what we got. Now, as you can see on the chart, we have had follow through. So I'm going to remove this this vertical line so you can see price here. But on earnings day, which was this green candle last Tuesday, the stock moved 1.92% for the day, which is well within the earnings estimates of a move for the stock. And then we have had some follow through, but it's finding some resistance up here at 175 right now. We'll talk more about this stock here in just a few moments. Let's go to our next headline, which is Delta Airlines. Delta on sales guidance, it disappointed as the airline indicated demand forecast for the upcoming quarter. If we look at the chart for Delta Airlines, what's interesting is we have this move. Oh, there we go. The outlook was for a move of between 5 and 7%, anything less than 7%. And believe it or not, on earnings, the stock moved lower by only 1.35%, considering that sales guidance disappointed and that they gave an outlook of lower guidance for the quarter. But you can see here on the chart, the next day on Friday, Friday, the stock reversed course. And today we're up nicely, up almost 3% on the stock. This is just one of those weird things, kind of buy the rumor, sell the news, but in reverse here. They sold off on the news, and then now they're buying on post announcement. So interesting thing. But Delta Airlines is in an uptrend, and you can see that uptrend is continuing. So good news for stockholders, but interesting on the earnings miss. Moving on now to JP Morgan. What's interesting about JP Morgan is they always like to be first when it comes to earnings season. And it was PepsiCo that beat them this time to the line. But JP Morgan, they had an EPS of 437, and they beat that estimate by 39 cents. And, they beat all up and down, okay, on JP Morgan. They top estimates, and they were better than expected on interest income. Now, I find this interesting because think about what that means. Interest income. We just came off of a period of higher interest rates where banks were just cashing in, and all of a sudden, it was higher than expected on interest income. That just seems a little. I think that's analyst speak, or we missed it again. But the stock on JPM, the stock, it rallied nicely on earnings. The estimated move was less than 5%. And what do you know? The stock moved 4.44. That's right in line with what estimates were. And then today, we did have some follow through to the upside. But interesting now that JP Morgan is pulling back. The financials right now are having a flat to down day, which I find interesting. Across the board with a few exceptions. And one of those exceptions is the next stock we're going to talk about, the headline from last week, which was Wells Fargo. If we look at the headline, Wells Fargo jumps on earnings per share beat, revenue disappointed. How many times have we heard this story where EPS beats, revenue disappoints? This has been a consistent piece of information. Yet, if you look at the chart, you'll see that the stock is, rallying, and it's having a good day today. So the estimated move was less than 5%. Well, the stock moved up and closed up 5.61%. That's pretty much in line with estimates as far as stock movement goes, where the market makers were pricing the move for the stock, pretty much right at that number. But you can see here today that the stock is having a nice follow through day, up almost 3% on some follow through trading, and it's in a nice little uptrend too. And one more that I'll talk about, we don't have it for a headline, but that is BlackRock. This had an expected move on Friday of less than 3%. And the stock moved 3.63. So kind of the same story here on BlackRock. Now, this is, look at the pricing on this. Currently trading at $993.33. We're seeing a lot of these stocks really get up into these high nosebleed areas, and interesting to see when they're going to split, if they're going to split. We had this issue with NVIDIA. They finally did a stock split, but it changed the direction of the stock. And there's more story behind that, but we'll talk about NVIDIA when they have earnings coming up, but not today. So BlackRock, we talked about last week. The estimated move, as I mentioned, was 3%, and they moved 3.63. Kind of the same story here. They're up 31 basis points today, but you can see they're off their highs. The little red candle there, they're off their highs. And we'll see if they close higher or lower today. What's interesting is today is Columbus Day. This is a national holiday, except it's one of those weird days where the stock and options markets are open, but the bond market and banks are closed. So, that brings some interesting dynamics into stocks when bonds aren't trading. And usually we see a day like this where the market's higher, many stocks are higher. And that may revert tomorrow. We'll see when bonds and the banks reopen. We'll see. So that's kind of our earnings recap for this week, and this week for last week. And then this week, man, the earnings start flowing. We have, I think it's 175 companies declaring earnings this week. We're focused on at least 65 companies that we are focused on. And I've kind of consolidated some of the more bigger names here on my sheet. Let's start on the left-hand side of this page. We only have 4 real movers this week. We have United Airlines tomorrow. On Tuesday, we have Walgreens also tomorrow. Thursday, we have one of our most consistent movers, which is Netflix. The problem with Netflix is that's also a $900 stock. And the thing is, while it's consistent in moving, I'm just looking at it's a $711 stock. Okay. Netflix is going to have a possible move of greater than 11%. So if we go back to our list there, I want to point out to you the banks, because we are still full of banks. What I've listed here, we have Goldman tomorrow, we have State Street tomorrow, Wednesday we have Morgan Stanley, Thursday we have Truist and Huntington Bank shares, Friday we have Fifth Third and American Express, and that doesn't even include some of the more regional banks. We also have Schwab this week, but we have regional banks like Simmons First National and Ocean First Financial, and just some of these obscure names that you don't really hear from that are considered more regional. But Schwab and many others do report this week. But let's focus on those on the list. Let's begin with United Airlines and look at the chart here. We have, as I mentioned, earnings on United Airlines tomorrow after market close. The expected move, believe it or not, on this is greater than 10%. All right. This stock tends to be a mover and it is priced to move for tomorrow. We will keep an eye on it, but this is kind of a one of those big movers. Okay. Next on the list that I wanted to highlight this week was Goldman Sachs. This is a $500 stock right now. Earnings are tomorrow morning, Tuesday, with an expected move of less than 3%. Now, here's the thing about Goldman. I'm really concerned about the financials. In other words, they're having slightly bigger moves than what we normally expect. So we'll keep an eye on Goldman. Now, Goldman isn't so much a bank as they are more of a trading and investment firm, even though they have a bank component. But we'll keep an eye on them nonetheless. Next on our list is Abbott Labs. All right, Abbott has earnings on Wednesday before market open. Estimated move here is less than 5%. So market makers are pricing in a move around that 5% number, maybe a little bit less. Currently, the stock is trading up 1% today, but the stock's been in a nice uptrend, and really the only thing that could derail that is a great blowout report. Maybe something that's in their pipeline. So I would watch for headlines on this. But again, the expected move, again, this falls into our quiet candidates. Really, anything under 10% is a quiet candidate. I got one more quiet candidate to talk about, but before we get there, let's talk once again about Netflix. We showed the chart just a moment ago, but I want to talk about it again because this is a historical mover. The thing is priced at $700. I just priced out the straddle and strangles on this, and they're over $5,000. Okay, over $5,000 for a straddle. Now that doesn't mean that the trade wouldn't work. Okay, you can actually with a big investment, you can make some big dollars on a stock like Netflix. However, it's just this is one of those stocks where I decided let's take a breather. Didn't really want to commit that to lower my buying power just because there's so many opportunities. Because think about it, you put up that much money, you put up $5,000 per straddle, per strangle, that deflates your buying power substantially when you can get other opportunities and more other opportunities at a lower cost, which doesn't affect your buying power as much. But nonetheless, we're going to keep an eye on Netflix. They have earnings Thursday after market close, and we will keep an eye on that for a move greater than 11%. Another breakout stock that doesn't hit our list very often, but this is a consistent mover, is WDFC. This is WD-40. Most everybody is familiar with this product. And believe it or not, they are a publicly traded company, and they are trading at almost $260 a share. If I pull in more of the chart here, you can see that they've been higher, they've been lower, they bounce around. This is a pretty good stock to watch and keep track of. And they do have an estimated move of greater than 10%. Their earnings are Thursday after market close. So watching Netflix, watching WD-40, these will be fun to watch on Thursday afternoon after market close. And the last one that we'll look at today is American Express. Okay, this has a earnings call on Friday morning before market open. And again, another quiet stock candidate with a move less than 6%. Okay, but as you can see, another expensive financial. This stock is currently trading at $276. Pretty much flat, right at 276 flat, which it's actually been at all day. Thought that was an interesting price where it stopped. Not 265, not 275, or anything like that. Just right at that 276 number. All right. So those are the stocks that we're really focused on this week, both movers and some non-movers going in through earnings this week. All right. So as we kind of close out our session today, be sure to look at the chapter feature for each of these stocks that we talked about. That is available underneath this video. You can go through and just recap what we've talked about and the estimated moves and their date of their earnings that are coming up. But these are all S&P 500 or multi-billion-dollar companies, and so pretty much everybody hears about them or knows about them. and they're always fun to watch. All right, so let's get into the trade from last week that we talked about, and that was PepsiCo. We did an iron condor. We were expecting a quiet move, but what I did was to get a bigger potential return, I extended the trade out by 1 week. There's pros and cons to doing that. Okay, the pro to doing it is if you go near term, then your options expire pretty quick. You get that sudden drop in implied volatility. You capture that small premium and you move on to the next trade. You extend it out even a week, you can run into an issue like we're running into. If we take a look at where we are today, we have 4 days left in the trade, and you can see we are still within the upper break even of the trade. Okay, that's that light blue line up there at the near the top of price, and just below that is the dark blue line that represents the current price. You can see we're still within the break evens of the trade, and we only have a very small profit, just $5, okay, in the trade. So we need either time to go on, or we need the stock to drop a little bit for Pepsi, and that is the disadvantage of going out even 1 week beyond the earnings date with your trade. Okay, I took in more premium, but now I have more time to deal with, and here I have 4 more days after today for to capture more of that premium. So, like I said, either need the stock to stay right here for 4 days, or I need it to drop. So 2 out of 3 moves, I'm okay with that. Those are good odds, but we are testing the upper break even of the trade. All right. So speaking of iron condors, and again, we do these to capture premium, take advantage of those high premium values, and for the stock to move a small amount and premium values to drop, and we capture that difference. So our trade of the week that we're going to look at this week is Goldman Sachs. All right. This has an estimated move of less than 3%. Just looking at the latest numbers, still less than 3%, currently at 2.71%. And so, lesson learned from PepsiCo, what I did with this is these options will expire at the end of this week. So these are October 18th options, and we are expecting a move less than 3%. So we've gone out with our break evens around 5%. So my concern here is possibly a big move because it's a financial, meaning maybe 3 to 5% move because it is a financial. But on the good side is there is very little time before these options expire. So we are really looking at capturing that premium right after the earnings announcement tomorrow. Okay, looking to capture that. So there's still time to get into that trade today. Looks like we're selling the 545 calls, we're buying the 550s, and then on the bottom side, we're selling the 445, the 450s, or the 495s. Okay, we're selling the 495 puts and buying the 490s on the bottom side is how that strategy is set up. So if you need to rewind a little bit, we got it cleared up there. But again, I'm only going out to this Friday with the expiration, but there's still some nice premium there. We're looking at about $160 of premium. And based upon a $10,000 portfolio, that has the potential reward of $160, which would be a 1.6% return on portfolio for just one spread. So if you do 2 or 3 spreads, you just do the math, and you can see the impact that these trades can have on a very short period of time. Okay, well, that's earnings call for this week. If you like our quick little format, going through these stocks, giving the estimated moves, please like us, subscribe. We do it each and every week, and we are just now getting into the heart of earnings season. So join us each and every week. We got a lot coming up. Everyone have a great trading week, and I'll talk to you again soon. Take care.